Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. Let's take a look at the stories for the day. Prime Minister Narendra Modi has completed 9 years in office. Between bowing down at the steps of Parliament to stepping into a new Parliament building, these 9 years were marked with several challenges, including the once-in-a-century pandemic. But how do we judge the performance of any government? One of the ways is to find out how the predecessor performed. We analyze how the governments led by Narendra Modi and Manmohan Singh performed on select economic and social indicators across applicable periods. Nazia Iqbal and Ruchika Chitravanshi take us through it.
Today, on May 26th, the Narendra Modi-led government is completing 9 years in power. The general elections are drawing close and dust will not settle on the campaign trail anytime soon.
While the ruling BJP will talk about its achievements, the opposition will list out its own. Let's compare some of them.
The gross domestic product, or the GDP, has grown from around $2 trillion in 2014 to over $3 trillion currently. And it is expected to cross the $5 trillion mark by 2027, according to numbers from the International Monetary Fund.
While in the earlier government, the GDP increased from $0.7 trillion in 2004 to $1.9 trillion in 2013.
The average Indian's earnings, broadly measured by the per capita net national income, increased by 43% in the last 9-year period of the Narendra Modi government.
This is lower than the increase of 50.5% in the per capita net national income during UPA's tenure from 2005-06 to 2014-15.
Let us talk about infant mortality rate. Data from the National Family Health Survey, or the NFHS, shows that the infant mortality rate declined significantly. The rate was 35 deaths per 1,000 live births in the first 5 years before 2019-21 survey, compared to 57 in the period ending 2005-06.
The maternal mortality ratio has contracted to 97 deaths per 1 lakh live births in 2018-20, as per the latest data available, compared to 301 in 2001-2003.
Sanitation services have improved both in rural and urban areas, pushed along by the government's Swachh Bharat mission. Nearly 70% of the households used improved sanitation facilities in 2019-21 compared to 29.1 in 2005-06.
Overall, 58.6% of households in India used clean fuel for cooking in 2019-21, aided by the Pradhan Mantri Ujjwala Yojana, which provided free gas connections. While during 2005-06, 25.6% households in India used clean fuel for cooking.
What may also go down as one of the hallmarks of the Modi government is its proposed privacy law. The reworked Digital Personal Data Protection Bill is likely to be tabled in the monsoon session of Parliament. Meanwhile, in Europe, Facebook owner Meta Platforms has been slapped with a record $1.3 billion fine for failing to protect users' personal information from the US security services. It has been told to stop transferring users' data to the US. So how will this action by the EU's privacy regulator influence India's plans to regulate big tech? Tariq Ahmed has the answer.
The continued data privacy conflict between the European Union and the US has a new causality. Following a probe by the Irish Data Protection Committee that is responsible for regulation of Meta in Europe, the European Data Protection Board has slapped a massive $1.3 billion penalty on Meta. The EU regulator alleged the processing and storage of EU personal data in the United States violated the European Union's data privacy law, known as the General Data Protection Regulation or GDPR. The law distinguishes the information that can and cannot be transferred within countries or between international organizations. Under the GDPR, so far, this is the largest fine that has ever been levied. The European Data Protection Board has directed Meta to stop processing of personal data of EU users in the US within the next 6 months. The latest penalty on Meta is consequent to a long battle between US rule on accessing data and the privacy rights of Europeans. The concerns about the US National Security Agency's authority to access personal data of even non-Americans from US servers have inspired the European regulators to take strict measures. But transatlantic data movement is critical for the $7 trillion worth of economic activity as of March 2022 and around 5,300 businesses that rely on seamless data transfer across the Atlantic. The latest development highlights the continued uncertainty around how global businesses may legally transfer EU user data to overseas servers. Let's turn to Mehak Khanna of Khaitan & Khaitan to understand India's existing laws in relation to processing and storage of Indian users' personal data abroad.
There are these certain information technology, reasonable security practices and procedures and sensitive personal data or information rules 2011. So for the sake of discussion then let's call them these 2011 rules. So under these rules, any body corporate and it can be any company like, a Meta or Twitter or any company based out of India, it can, transfer sensitive personal data or information to any other body corporate located in any foreign country. But there are two conditions to be met for that. Firstly, it needs to ensure that the same level of data protection is, adhered by that body corporate which is mentioned under these rules. And secondly, it needs to transfer the data if the data subject has consented to such a transfer, or if under the contract between the corporate and the data subject, this is something which is essentially required for the performance of the contract. So basis these conditions, the data can be transferred.
It's about time global businesses based in India should be careful about transferring and storing user data to foreign servers. Any breach may lead to a fine of up to 5 lakh rupees or 3 years of imprisonment for its authorized representative or both. India is also working on a new digital data protection bill which is scheduled to be presented in the upcoming monsoon session of the Parliament. What change can the proposed bill bring up regarding user data management?
What is going to be the position in the proposed digital personal data protection bill, which is still pending in the Parliament? Hopefully we will sort of see the final draft introduced in the monsoon session, and that could be passed. There are, of course, certain restrictions there in terms of transfer of critical personal data. So all critical personal data, which has not as such been defined as yet in the law itself, but would be defined and identified subsequently after the passing of the bill by the central government. there are specific restrictions and there are hard data localization requirements for that.
Experts also point out that instances like imposing fines on Meta will drive India to strengthen its rule to safeguard data of the Indian users. Big techs like Meta, Google and Amazon will have to make the required changes in their platforms and applications to comply with the new regulations.
Obviously, what's being the regulatory position elsewhere in the world, I think it would become a precedent in other countries. So we are already seeing extensive discussion in the regulatory, fraternity, which is talking about similar fines being imposed in other parts of the world as well. And probably, yes, once we have the relevant provisions in India, India could also follow suit. Also, from a purely company perspective, Meta could actually start in their policies, and which could impact Indian users as well.
We are a few months away from getting clarity on the nuances of the proposed Digital Personal Data Protection Bill that the government is working on. Meanwhile, notwithstanding the regulations, experts emphasize that global companies should voluntarily incorporate protection of user data in their DNA.
Meta, meanwhile, has started its third and last round of layoffs. Several top Indian executives have also found their names in the list. Moving on, India's largest insurance company, Life Insurance Corporation, had hit the bourses a year ago. But the stock proved to be a wealth destroyer for investors, crashing nearly 40% during the period. The management had to deal with the decline in the value of its investments in Adani Group, along with higher tax rate on insurance premium above rupees 5 lakh. Going ahead, what does the road look like for LIC stock? Will it finally reward its investors, or should you stay on the sidelines? Nikita Vishish explores in our next report.
Shares of Life Insurance Corporation of India, or LIC, have seen a steady rise on the bourses over the past 1 month. The scrip has rallied 8% on the BSE as against less than 3% rise in the benchmark S&P BSE Sensex during the period. The rally got a leg up on May 19th when a Supreme Court appointed panel said it could not pinpoint regulatory failure as far as allegations of price manipulation of Adani stocks were concerned. The ensuing rally in Adani Group stocks lifted the value of LIC's investments in the group companies to 44,664 crore rupees. LIC cumulatively holds 37% stake in 7 of the 10 group companies. Surprisingly, Christopher Wood of Jefferies has held on to his investment in Adani Ports and Special Economic Zone with a 4% weight in his India long-only equity portfolio, despite the sharp fall in the counter on the back of negative news flow in the last few months. Wood says that the Hindenburg report is no reason for him to exit the Adani stock.
From my colleagues, there's nothing that new in that report from the standpoint of people close to the stock market. So my understanding is that this group owns quality physical assets. So it's not like it owns some ephemeral, theoretical blue sky story. These are hard physical assets which generate income.
Going forward, analysts say investors should focus on LIC's strong fundamentals rather than individual investments before taking any position in the stock.
The profitability is growing, really well. The product mix is improving. They are churning the product mix in favor of in favor of products with higher margins. So there is clearly a focus on improving the business through improved product mix and consequently higher margins. And the overall ecosystem from a macro standpoint also is conducive to LIC.
On May 24th, LIC reported consolidated net profit of 13,191 crore rupees for the January-March quarter of FY23, rising about 5.5-fold year-on-year. For the whole financial year, net profit surged to 6,397 crore as compared to 4,043 crore rupees seen last year. Over the next 1 year, Nirav Karkera of Wisdom expects LIC's stock to hit 820 to 825 rupees mark, translating into 39% upside from current levels. Thus, analysts expect this wealth destroyer to turn into one of the best wealth creators in the near to medium term. On May 26, Q4 earnings and debt ceiling negotiations in the US will be on investors' radar.
From Dalal Street, let us shift focus to the corridors of the newly built parliament. Prime Minister Narendra Modi will inaugurate the building this Sunday, May the 28th. He will also install a historic scepter from Tamil Nadu next to the Lok Sabha Speaker's seat. It is called Sengol. Ragha Agarwal tells us more about it.
Home Minister Amit Shah earlier this week announced that Prime Minister Narendra Modi will install the Sengol, a historical scepter from Tamil Nadu, in the new Parliament building set to be inaugurated on Sunday, May 28th. He said that Sengol had played an important role in India's history as it is a symbol of the transfer of power from the British. The Sengol will be kept next to the seat of the Speaker of Lok Sabha. But what is this Sengol? Sengol is a scepter given to India's first Prime Minister, Jawaharlal Nehru, as a symbol of the transfer of power from the British to the Indians. On the eve of India's independence on August 14, 1947, the then Viceroy Lord Mountbatten asked the to-be Prime Minister Jawaharlal Nehru, what is the ceremony that should be followed to symbolize the transfer of power from the British to Indian hands? Nehru consulted C. Rajagopalachari on the issue. Rajaji, who went on to become the last Viceroy of India, quoted a Chola model where the power was transferred to one king by another in the presence of a high priest. Cholas used a scepter, Sengol, to transfer the power. Then, Bumidi Bangaru Chetty and Sons, jewelers from the Madras Presidency, were asked to craft the scepter. It was made by Bumidi Ethirajulu and Bumidi Sudhakar, who still live in Chennai. The Sengol is mounted by a carving of Nandi. On August 14, 1947, the Deputy High Priest of Thiruvavaduturai Adhinam, Raja Rathinam Pillai, and an Oduvar who sings devotional songs in Tamil temples, was flown to Delhi from the then Madras Presidency. In a ceremony at 11 p.m., the Sengol was handed over to Nehru at his house. Several dignitaries, including to be President of India, Rajendra Prasad, attended the event. Since it was handed over to Nehru in 1947, it has been kept in the Nehru Gallery of Allahabad Museum in Chandrasekhar Azad Park. The Ministry of Culture took over the museum in 1986 and declared it a museum of national importance. Amit Shah said that the plan had been made in consultation with all presidents of Adhinam. All 20 Adhinam presidents will also be present on the occasion to shower their blessings in reminiscence of this sacred ritual. Adhinam literally translates to Sanctuary of Wealth and Knowledge. It is commonly called a mutt. Shah also said that 96-year-old Bumidi Bangaru Chetty, associated with Sengol's creation, will also participate in the ceremony.
Nation's trusted bank, SBI, the banker to every Indian.
So the newly built parliament will proudly house Sengol, the 5-foot-long scepter whose orb symbolizes the world. and it bears a massive significance for independent India. That's all for today. Catch the next episode of the morning show tomorrow. Thank you for watching.
For more news, views and updates, subscribe to Business Standard on Google Podcast, Apple Podcast and Spotify. Also follow us on YouTube, Vimeo, Instagram, Twitter, Facebook and LinkedIn.